Historic moves in the price of gold and silver, a renewed interest in the gold and silver mining sector. Today, we're going to break it all down with Dan Wilton. He's the CEO of First Mining Gold. He's also going to tell us about some major accomplishments his company has had during 2025 and some great things to look forward to in the coming year. Dan, welcome to Ron's Basement.
Ron, it's always a pleasure to be back in the basement, if only virtually.
Well, you've been coming down here for years, and you're always welcome here. Actually made an in-person appearance at one time.
Yeah.
But, you and I have been talking for years. What's going on right now in the precious metal sector is really nothing short than historic. When you look back, let's say 3-5 years, and you look at what's happening now, are you seeing some big differences, things that are making you kind of excited about the future of the precious metals?
Well, you know what I think is happening, Ron, is exactly the things that we all saw happening 5 years ago, right?
Yep.
It's exactly the reason that you started talking about gold and silver. You saw this coming. We've all seen this coming. A bunch of the world doesn't quite see it coming yet, which is the interesting part. But I think there's really, really interesting things on the macro. That when people are saying, oh, you're starting to see gold's overbought or silver's overbought, and when's the crash coming? The reality is, I think when you look at it now, all the things that got the value guys like us into gold and silver, which are things like fiat currency debasement, it's things like runaway debt, it's things like governments without the political will to solve their own balance sheet issues. Those things, if you look at it right now, are bad, and they're getting worse, and they are getting worse every day. And so what we've seen is the rest of the financial sector now recognize that and look for alternatives. And it's alternatives to the US dollar. It's alternatives to fiat currency broadly. And I think, where I find it really interesting is what is becoming, I think, the great coming together of kind of the crypto world and the gold and silver world through stable coins and other things, which are really, really starting to gain some momentum. But the momentum is so big that it's having major impacts in the fundamental commodity markets.
Yeah. Tether, who's the world's biggest crypto company, is now the world's biggest holder of gold outside of central banks. And, that tells us kind of, the future, the marriage, in the tokenized gold and silver products are really almost a perfect marriage between physical and the blockchain, and could create a massive additional source of demand for both gold and silver. The one thing I wanted to throw in, I think yesterday we had some big news. You talked about this favorable macro environment for gold and silver. Jerome Powell cut interest rates yesterday, but more importantly, and I'll go ahead and say it, he basically announced a new round of QE that the government is going to be buying. I think it's 40 billion, not the government, the Fed is going to print money and buy 40 billion worth of treasury bills, short-term treasury bills going forward. And that starts not at some point in the future, it starts tomorrow, which to me just is, proof of what you discussed earlier. Like, this macro environment is favorable.
And if you say it starts tomorrow, Ron, we all know it probably started a few weeks ago. Let's be honest about this. No, I think I continue to be pretty amazed at the pace with which we're seeing this kind of debasement of currencies. I've been traveling a lot. We were talking about this recently, but I spent quite a bit of time in Europe. I don't think there's a safe haven in Europe anywhere. You look at the fiscal situation, in the UK, in France, in Germany, it is dire. And, you pivot back to the US, and there is zero appetite to address, what is a record and unsustainable deficit in spending. So, politicians won't stop spending money. And markets for now are continuing to fund that, but we're starting to have to see central banks step in. in a non-crisis situation, right?
Yeah, right.
Let's be clear,
Right.
like the president's saying the economy's great and everything's fine, but you have the Fed stepping in with QE, like something does not add up. And that's why I think we're seeing all around the world those governments with a little bit of flexibility, financial flexibility, China kind of first and foremost, have been and continue to, at a higher pace, stockpiling gold, right? They are rotating out of US dollars into gold.
Yeah.
And that's underpinned this I'd say new level in the gold price, but nothing that has caused that swell of interest over the last really, what, Ron, like 3 or 4 years, we've seen the central banks really starting to step up.
Yeah.
All of the reasons that have caused them to do that are just as valid or more valid today than they were when it started.
Yeah, yeah. So the macro environment for gold and silver look very good. I've always had an interest in the mining stocks as well. Like you said, you've been, traveling the world, going to conferences recently. Are you sensing, let's say compared to 3 years ago, is there a different mood out there in general?
You mean not active disdain for what I do for a living? Yeah, I think it's remarkable. I think there's been an entire order of magnitude more interest that's come into the sector broadly, starting as it always does. We could have called it. This happens every cycle. It starts with gold, it goes to the producers, and then it goes to smaller cap producers with higher cost and higher leverage, and then it comes down to the developers and the explorers. So we always call it the trickle-down effect. And we're absolutely seeing that. I think you look in the last 3 to 6 months, you've absolutely seen that in the market. But what's interesting for us is, you've also had a very vibrant M&A market. So you have a lot of larger projects and advanced stage projects that have been bought by producers who need to replenish reserves and or grow production. So I think what's really changed, we're at the point in the cycle now, and I'll go back a couple months, but in the big meetings in Colorado in September, almost every gold producer, major gold producer's presentation, which for the prior 10 years had been about cost cutting, capital efficiency, and then most recently, like, margins are improving, return of capital. Every single one of those, the headline on the presentation was growth. Mm-hmm. Growth. Look, we have this growth. We're the ones with the growth. And you're seeing in the market, you're seeing the large cap and mid cap gold producers with the growth profile trading at substantially higher multiples than those that don't have a growth profile. So what does that lead to? It leads to those other companies going to acquire a growth profile. And that's where it starts getting pretty interesting for companies like us who have these large projects that we've been on a very long walk through a very dry desert for a long, long time, where no one wanted to fund permitting. No one wanted to fund, engineering studies and feasibility studies. But we're at the point now where, I'd say even just in the last 3 months, there's been a sea change in the recognition of value of assets like ours.
Yeah, your stock has done very, very well. And next, I do want to focus on First Mining Gold because of what you've accomplished during 2025, but also coming out in 2026. But I also want to throw in that, like, the world seems to be, like, in the last 6 months, last 3 months, last year, scrambling to find gold and silver. Yeah. And I want to point out something very important, and that is that I think that because of the suppression of the prices of both gold and silver, I think it's important to recognize that there weren't a lot of companies out there exploring for gold, developing gold projects over the last 10 or 15 years. Because like you said, the big gold miners were more focused on cutting expenses, getting rid of debt, all that. Now, suddenly it's shifted to, oh gosh, we need to replenish our pipeline. Because every time we mine an ounce of gold, we need to replenish our pipeline. Yeah. But on top of that, we want to grow. And there just aren't a lot of big projects out there which I think feeds in beautifully to what you've done over the last 10 years. Like you were, like it was kind of a ghost town. I was with you through the journey, or a desert, or, however you want to say it.
Indeed.
There weren't a lot of people out there developing and or exploring for big projects. And now it's become kind of, this major focus, and there just aren't a lot of those projects out there. So tell us about what happened in 2025, some of the highlights, but I think even more importantly, as we look out into 2026, I know that First Mining has potential for some huge catalyst on the horizon, and there's still value in the developer in First Mining stock. I mean, the value, I'll let you touch on that as well. The floor is yours, Dan.
No, thanks, Ron. Well, 25 has been a big year, as you know. A major catalyst for our company around the environmental assessment process at our Springpole project in Ontario. So we, submitted our final environmental assessment in November of last year. We went through a public comment period. We've been back and forth with federal and provincial regulators, and have been spending a lot of time and having some very constructive discussions with Indigenous communities that we're working with. That's culminated in one important agreement that we signed during 2025 with Mishkegowgamang First Nation. And we're still continuing to sort of finish those work streams. So the regulators were federally, I think we're largely done that back and forth. Provincially, I think we're still sort of tying up a few loose ends in kind of their fact finding, understanding the work that's been done. In some cases, requesting a little bit more work to be done. We're kind of coming to the end of that process. And everyone is targeting now, I think, an environmental assessment decision, before the end of Q2. So we'll call it in the next 6 months. Yeah. People need to remember that we've been in this process. We entered into this environmental assessment process in 2018. So, we are in February 2018. So we are nigh on 8 years of having been doing this permitting work. Like you said, Ron, at a time when no one wanted to do it, no one wanted to touch it, no one wanted to go through a protracted permitting process in Canada. I think the governments have recognized that now, and we're starting to actually see some pretty constructive moves in terms of how governments are trying to streamline that process for the projects to come after us. And, we're thankful for that. We're thankful for that for our Duparquet project, particularly, because I think, Quebec's going to get it right. But, I think we're at the tail end. And what sort of differentiates us now from a number of other companies who are just starting that process,
right? Yeah,
is, there's very few projects that you could see get financed and get shovels in the ground before the end of the decade. And it's just the reality of those processes, even if they try and condense them. Like, I don't think we're getting to a point where you can go through an EA process in Canada in 2 or 3 years. Like, I will be optimistic that at some point we can achieve that. But I think just with the work that we've done, the things that are the rate determining steps of these processes are often about building relationships, right? Yeah. It's often about understanding the communities that you're working with and giving them the capacity to, understand and participate in the process. That stuff you can't really rush. And so, what it's going to mean, and going into 2026 for us, some of the major catalysts are coming, is that we get the environmental assessment approval, and hopefully, we'd like to think we'll have a couple of other agreements with communities before those EA approvals are granted. But we kind of get all of that clear demonstration of, an operating social and environmental license. Well, it's pretty hard to think that these ounces in the ground at Springpole, which people have always dismissed because the deposit's in the Bay of a Lake, it's pretty hard to think that those are still worth $30 an ounce when there are very few advanced stage developers that you could actually see a shovel go in the ground in any tier 1 jurisdiction in the next 5 years. And, those where that are a little bit ahead of us, or sort of further closer to that construction decision, are trading at $150 to $200 an ounce, which historically is kind of where advanced stage permitted projects have traded. So, we keep telling people, like, yes, the stock's up 400% this year, but it's up from $7.50 an ounce to $28 an hour, $30 an ounce, right? Like,
Yeah.
there's still lots of room here. Like, this is still a deep, deep value play.
And you have, is it safe to say, a head start? It feels like to me that with Springpole and all the work that's gone in, that you have a big head start. And I want to frame this for our viewer. I should have done this before I asked you the question about Springpole. You're a company with two huge development stage projects. There's Springpole, which you just talked about, but there's also Duparquet, which we'll touch on as well. But these are multi-million ounce deposits that have been worked on for years and years. And like you said, right, this is like an elite class. There's very few projects of this scale located in a favorable jurisdiction like Canada. You kind of gave us an update on where things stand with the development stage on Springpole. What are the numbers behind it? Because I mean, they're astounding as well. I know you came out with the preliminary economic assessment. How do the numbers stack up? And what's the leverage to the gold price?
I mean, that's one of the things I think that's really sort of got people refocused on it. So our previous pre-feasibility study was done in 2021, and I think investors rightly were looking for a bit more information. They knew the costs were dated. They knew that there'd been a bunch of scope changes in the project. So as we were kind of updating some of this work just internally, getting ready for the feasibility study, we said, actually, I think it's really important for us to show the investors what this environmental assessment case looks like, just from an economic perspective. So, and that's important from a few things. One is the economics of the project, but the other that we'll be coming out with shortly is the economics of what this project means to Ontario and Canada in terms of potential tax revenue generation, in terms of employment generation, in terms of being really one of the largest potential drivers of the economy in Northwestern Ontario for a generation. Like, it's really, really distinguishing itself. But our updated pre-feasibility study showed a project with upfront capital of about $1.1 billion US, which was a pretty significant increase from 2020, but not unsurprising. But it also showed a doubling of our net present value from $1 billion to $2.1 billion.
On that project alone.
On that project alone, okay. And that's at a $3,100 gold price, Ron. Like, we all, I think, have views of where gold and silver are going. But,
I've not checked the gold price for the last 9 months, but I think it's higher than 3,100. So.
Yeah, the last time I checked. So we ran a spot case at 4,200, and this is where you see that leverage, that 2.1 billion after-tax net present value, just on the gold price change and the silver price change, because we have a pretty significant silver component, goes up to $3.8 billion.
Wow.
Like, it almost doubles on $1,000 in the gold price. And, it's a pretty linear relation when you have a project, when you're assuming kind of, a set cost base. The one thing that's interesting, and we haven't really thought much about this, but we always look at our silver as a byproduct. So you basically take the silver revenues and deduct those off your cost. It's a pretty standard way to think about, the value of producing your gold if you're producing, let's say, less than 10% of your revenues coming from another commodity. And for us, silver's at about 5%. So even with the silver stream that we have with First Majestic, like, it actually, the impact of the silver drops our all-in costs going from, call it $35 silver to $50 silver, drops our all-in sustaining cost by like 25%.
Wow.
Takes it down like from 1,000 to 800, which 1,000 is globally competitive, easily lowest quartile all-in sustaining costs in the industry. But I think you have that extra leverage to that silver price, which drops that number even further. So it's a huge project. It's very robust. It's got fantastic leverage to the gold price. And I think it leaves us in a really, really good position now, having had the team kind of refresh all these numbers. We now drive on to a feasibility study, which we're targeting to have done kind of by the end of 2026. We're starting to collect all of that data now, and we'll be collecting the data through kind of the end of Q1. There's some seasonal work we need to do. We have to do some drilling from the ice to get to collect some of the geotechnical data that we need, but in a very, very good shape to do it. And yeah, we continue to remain very well funded. We've got, about $35 million in the bank. And what I guess shouldn't have surprised us, but is surprising us a little bit, is we're now, a lot of the participants in our financings over the years, Ron, you being one of our very dear and loyal shareholders, we have a lot of warrants outstanding. Because all of these financings we did had warrants. And so we're now seeing, it used to be kind of once a week. We're now almost seeing once a day with the share price above 50 cents. All those warrants are in the money and starting to get exercised as shareholders are just looking for more leverage. So yeah, I think we're in a really, really good shape that way. But I think a lot of that's been underpinned by us kind of resetting the market's understanding of the economics at Springpole, which have shown themselves to be very, very robust.
Yeah, so it's a huge project. Could be a major contributor to the communities in the area. It sounds like sometime in the first half of 2026, we'll be expecting to hear on the environmental assessment permit, and then later in the year, a pre-feasibility study. Those are some pretty big potential catalyst for a massive project in Canada.
Yeah, and later in the year would be the definitive feasibility study that you'd use, bankable feasibility study that you'd use to go out and arrange project financing, and get ready as you go through the permitting process. Get ready to make that construction decision, which is probably somewhere between 12 and 18 months, but we'd say 18 months after the environmental assessment decision's made.
Okay. And I also think it's worth mentioning to our viewer that you've got like a first-class team working on this. I know Steve Lines is working on the permitting process, and previously he was involved. Is it the Greenstone mine that Equinox now is running? I mean, he has a track record of success in that area.
Yeah, I know very much. And a lot of the teams here in Vancouver for our Christmas party today, which is exciting. Stephen, James Maxwell, and I traveled back from Thunder Bay together last night on what ended up being a bit of an adventure. But we've got a great team that has actually gone through this entire process with the most recently permitted and now built large-scale project in Northwestern Ontario. So again, those relationships with the regulators have been really important. Just the team and the experience of how you navigate and solve problems. And that's it's essentially what this environmental assessment process is. It's understanding where there might be impacts and then bringing smart people together, engineers, environmental people, to figure out how you can mitigate whatever of those impacts might be. So it's been great. We're very, very fortunate to have a team, but everyone's very focused on the finish line right now, as you can imagine, Ron. Finish line or starting line, depending on how you look at it.
Yep. And I've been following the company. I looked back before we came on. My first video I made about First Mining Gold, before you sponsored my channel, was all the way back in 2020. And the work that's been done just in that 5 years alone, and I owned the stock for years prior to that, or a few years prior to that, has been very consistent, very high quality. And I think now in this new environment that we're in for precious metals, starting to pay dividends for everybody that saw the value and believed in the company. So Springpole alone, right, is super attractive, high value. But I have to say, but wait, there's more.
But wait, there's more.
But wait. If please don't. You've got to hear about the Duparquet project, because it's also very attractive, and I think could provide some catalyst as we move into the coming years as well.
Yeah, for sure. And our focus on Duparquet over the last year has been really on exploration. And we continue to grow this deposit. We know that there's more mineralization there. our success rate with exploration in finding new zones of gold mineralization is pretty incredible. Like, there's not many projects where you're hitting gold in almost every drill hole, and James and our exploration team have done an amazing job with that. The other thing, importantly, and we're starting to see the real benefit in this, just in our discussions with the province, is we've taken a very transparent and pragmatic view towards starting to remediate some of the environmental legacy from the old mine. And you've been to the mine site, Ron. You know, it's a mine that produced gold from 1933 to 1956, and there's a bunch of legacy infrastructure there. But we've finished this year one of the largest construction projects that First Mining's ever taken on, building a new storage facility for some of the old mine residue byproduct with the arsenic trioxide. So that plan is well in place. But I think, you know, what that's sort of earned us with the province of Quebec is just, you know, I think an understanding that we're a company that's focused on doing the right things, and it's been a very collaborative process. Quebec is an amazing place to work, like it really is. And when we talk about kind of the head start on these projects, you know, one of the things people don't really appreciate about Duparquet is that's a project that was taken to pre-feasibility study in 2014, right? So a lot of that work is done almost to the same level that Springpole is. And the amount of drilling that's in that project, 300,000 meters of drilling, like just the time to collect that data. If you were starting from today, like that's a 3 to 5 year process. If you were going like at 100,000 meters a year, which would be, you know, a major scale drill program. So it leaves us in this position with Duparquet, where, you know, we've got a couple of really important catalysts coming for Springpole, but we've started, I'd say now, almost all of the long lead time work we need to do to have Duparquet catch up and advance through this process. And, you know, very supportive discussions with the province of Quebec, who, you know, I think see the same vision that we do, which is that there's a project here that is in part addressing, you know, a historical legacy at the existing old mine site, cleaning up tailings that have been there for 70 years, but also creating what will be one of the largest and most robust gold projects in the province. Because our study on Duparquet, or PEA, was done in 2023, Ron, at an $1,800 gold price.
Dan, here I'm sorry, I have to show. There's a picture from when we visited the Duparquet mine site, and
absolutely, I don't know if you'll be able to see it, but I've got the same one right there.
There you go.
There.
Yeah. Well, it's interesting because there's a date on here which I was very great. October 12th of 2023 is when we visited. Okay, a little over 2 years ago. I looked up before we came on what the gold price was on October 12th, 2023. I want to emphasize, a little over just 2 years ago. The gold price was $1,870 per ounce. So when you talk about these numbers, I mean, it truly is incredible. The increase in value alone that you can attribute to this. You know, if you've got the gold price going up, and at the same time, good work going on these projects, it's like it's incredible the value that can be created.
Yeah, and you know, at Duparquet, that leverage is just as strong as it is at Springpole.
Yeah.
You know, our study, which was run at a base case $1,800 gold price, had about a 600 million Canadian NPV, but at a $2,200 gold price, that was like 1.1, 1.2 billion.
Don't get too aggressive there, going up to 2,200.
The only reason I say that is because that's what was published in the report as like at the time our upside case, right? And they wouldn't let us publish anything higher than that. Well, you almost double that.
Yeah. And
it's a pretty straight line relationship. Like, I can tell you, this project is worth billions and billions of dollars. It's one of the largest undeveloped contiguous gold resources in the Abitibi Gold Belt, which is an area that everyone wants to get in. So let's go back over the last couple of years. Agnico obviously dominates the belt. You've had Tony McCooch and Discovery Silver buying the entire Timmins camp. You've had Goldfields that's bought Windfall and made a big push into Canada, $2.5 billion pre-construction on a development project that's about the same size as Springpole. You have Fresnillo that's just come in and is spending $780 million buying Probe, which is 100 kilometers away. So like all these behemoths are scrambling to pick up what is really rare, which are these large scale deposits in the Abitibi. And we've literally got like the biggest next one that's there and the best located. So yeah, we're excited.
And I'm sorry to interrupt you, but you mentioned Fresnillo. Haven't they traditionally been like focused more on Mexico and so? Correct me if I'm wrong, but I thought I read that was one of their first forays out of Mexico in like a very, very long time.
Indeed. Yeah. I think it was, the only, I don't know about only, but certainly one of the most significant forays outside of Mexico for them. I think it's a group that's been looking for a long time at where are those opportunities outside of the country, because they have obviously a long-standing history of operating in that jurisdiction and very closely tied in at all levels of government and the mining industry. Yeah. But where do you find the 5 million ounce gold projects? Like, where's the next one in Mexico? I don't know.
Right. Yeah.
I don't know. So
and do you want to, when you compare the jurisdictions, I mean, Mexico has presented some challenge for mining companies in the last 5 years. Compare what's going on with Mexico to Canada, where there seems to be, I'm sensing an overall, how do I say, they're making it a little more favorable for mining companies in Canada in general.
Certainly the intent is there. We've seen a lot of announcements. We spent, a few days last week in London with a lot of the Ontario Minister of Northern Economic Development and a few ministry people from there and the Ministry of Energy and Mines and the Minister of Energy and Mines with a very clear message that like Ontario needs to develop its mining sector. It's open for business, real focus on critical minerals, but don't forget about gold, which is really important to Ontario as well. Yeah. So yeah, that message of, we need to get this right and make sure that we're doing what we can to simplify these processes for companies to advance these projects. So we're seeing that really all across Canada with varying degrees of success, depending on where you are. Yeah. But yeah, no, I think we've, in my career, which is 30 plus years, I don't think I've ever seen an environment that has been as pro resource development in this country as we have in the last 12 months. Like, yeah. I think it has a lot to do with the tariffs, a lot to do with that relationship with the U.S. and a recognition that Canada needs, to a certain extent, to control its own destiny and develop its own resources in order to fund all of the rest of these things that the Canadian population wants to have. So, yeah, I think we're well positioned that way, and have certainly very, I think, constructive governments in Ontario, in Quebec, and I think to the credit of the Indigenous communities we're working with as well, I think a lot of those communities really understand the importance and the imperative of economic development. They just want to make sure that it's done in a way that is environmentally responsible and recognizes the impacts that they are going to have on their traditional way of life and their treaty rights. And these projects will have impacts. There's no question about that. But I think what's important is us having those dialogues and continuing to work together. Which again, we're hopeful that could be something else that will drive towards as a major catalyst in 2026.
Yeah, for the benefit of everybody. And I want to emphasize for our viewer, like, in my view, First Mining Gold is ahead of the curve, right? We both have used the word scramble in our interview today, but the world is scrambling to find good quality gold deposits, and First Mining Gold has correct me if I'm wrong, but two of the largest development stage projects in Canada.
Yep.
One last question for you on Duparquet, then I have two more points I want to ask you about. But with Duparquet, you mentioned exploration potential down the road. Any blue sky feelings about how much that deposit could grow in the future?
Well, we'll find some time in the new year to have James and Caroline come up and give you the full view. Listen, what is important at Duparquet is that we have discovered and have now starting to understand the extent of a bunch of parallel zones of mineralization that no one has ever looked for before.
Yeah.
And these are the types of things that at any other project in the Abitibi, they're like the primary target. At Duparquet, no one looked for them because you had this existing style of mineralization, which was what they mined from 1933 to 1956. So no one ever looked for anything other than this gold in the cyanites. But that's now really, really changing. And I mean, it's exciting because we're finding, tens of meters of 2 to 3 grams at surface, just basically in what, if you were to like draw an open pit around where you were going to mine some of these things, this is mineralization that's sitting in the open pit and in our economic study would have been treated as waste. But it's sitting here as actually some of the highest grade open pit ore in Canada. So super excited. We need to understand the extent of it. We found it at Miroir. We found it at the North Zone. It's quite a big task to understand over 4 kilometers where you're going to find it. Is it continuous? Is it lensy? Like we'll see. But and that's just one facet of it. The other facet that's very clear on is like everywhere we have drilled under the existing mineralization, we have extended that mineralization. And in the Abitibi, these deposits are renowned for their vertical continuity.
Yeah.
And so you overlay, what Agnico has at Canadian Malartic, which is about 100 kilometers away, second largest gold mine in Canada. So they had a past producing mine. They had an open pit around the outside of it, and mining sort of disseminated halo of what had been mined underground. But they're now sinking a shaft 1,800 meters, so 5,000 plus feet, and they are going to be mining like 3 gram ore, big bulk mining 3 gram ore from underground. So, and if you look at the footprint of that, and you look at the footprint of what we have at Duparquet, they are eerily similar. So we're not drilling these deep holes yet because we don't need them for the economics of our project right now. But we know that this is on a trajectory to 10 million ounces.
Wow.
Absolutely. I mean, we're in the land package today, we're at 6.
Yeah. I mean, I remember because we were passing through St. Louis around the time that the Duparquet deal happened.
Oh yeah, that's right.
And what a big deal that was, because it had been a bunch of independent, or you expanded your land package significantly, kind of combining what had previously been a bunch of independent projects, and how exciting that was. And that even, I think at the time we talked about a lot of the borders between these previously separately owned claims really hadn't been explored because people didn't want to, necessarily explore for somebody else's gold.
Yeah.
What I'm hearing from you, and again, I'll ask you to correct me if I'm wrong, is that what you're saying is that at Duparquet, the footprint could potentially get bigger, but also it could get deeper as well. Is that?
Yeah, I mean, on the footprint side, yes, I think sort of on the margin. Yeah, but it's still not very well explored along strike to the east.
Okay.
So we're continuing to find some new zones of mineralization there. But I think it's very clear, like it's only drilled down in the main part of the deposit to about 600 meters.
Okay.
In the central Duparquet and Dumico, which are just to the east as you're driving in from Rouen, sort of just to the north of the highway. Those are mostly only drilled down about 250 meters. And, we've now connected some of those and extended them. And so we know that there's that continuity there as well. So the overall resource endowment in the top 600 meters here, considering that we have 5 million ounces there and they mined 1.5 million ounces out, It's like 1,000,000 ounces per 100-meter vertical,
Okay.
which is one of the biggest endowments, I think, of any project ever in the Abitibi
Wow.
in terms of size and scale. Now, it needs to be higher grade as you go deeper, and that's some of the things that we're trying to find. But, again, these contact zones, last year, our final drill hole into the north zone was 33 meters of 6 grams. Like,
Yeah.
that's something, and you follow that down, that, that could be an underground mine for a long, 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 long time. So, yeah, I think it's the surface footprint will likely end up, in and around sort of what we understand now.
Mhm.
But the opportunity really is going to be
Yep.
that this is a mine that I think will produce for, when you start mining it again, it'll produce for 50 years.
Yeah, yeah, super, super exciting. I wanted to mention for our viewer as well, Keith Neumeyer founded this company. He's a well-known figure in the precious metal sector, CEO of First Majestic Silver, which actually owns my other channel sponsor, First Mint.
There you
I'll
go.
give them a plug right behind me. If you want a premier first-class silver bullion experience, check out First Mint. But Keith started the company 8 years ago with a vision. We're seeing that vision now come to fruition. But I think it's also very interesting that based on publicly available records, I've noticed that Keith Neumeyer has continued to accumulate First Mining stock. If you can touch on that, and then talk about the inside ownership within the management team at First
Yeah.
Mining as well, because I think that's very important.
Yeah, I agree with you. So Keith, continues to acquire. I think the last I saw, so he participated in our financing in August, has bought a bunch in October and November after we put out the the PFS update. I think he's up to 42 million shares now,
Wow.
and like what's remarkable about that is like those are all purchased shares, like purchased in financings or purchased in the open market. It's very rare that you find a lot of these big entrepreneurs who really have their own money in a lot of these things. I mean, particularly those more familiar with the tech world. No, there's a lot of, founder stock that you get or whatever. No, Keith's put his money behind this, and importantly, for him and good for him and good for, and we're thankful for people like you, Ron, as well. There were those that were supporting this thing when we were raising money at 12 and 13 cents.
Yeah.
Because we saw that long-term vision and had the patience to be able to support it and ride it out. So the overall the entire management team owns shares. We're all extremely incentivized. I own 15 million shares that all but maybe 1 million and a bit of that, which have come from restricted stock units, which I basically took in lieu of cash compensation for a lot of years. Yeah. So my total exposure between shares and options and RSUs is probably 38 million shares. But I've got more than $2 million of my own money into this company, and very happy that I have, because we were underwater until probably 3 to 6 months ago, right? But it's having that faith and that commitment, and having a great team that's all similarly aligned and focused on the outcome, which is ultimately trying to deliver our best result we can for our shareholders.
Yeah, it is. It shows to me, which is always very important to me, that from the chairman down to the CEO to the management staff, alignment with shareholders, right? Like we're in the same boat together, and your interest is aligned with my interest. And I still do believe, just my opinion, I'm not a financial advisor, that the stock is still an unbelievable value at these levels. I mean, I know we got to wrap this up, but when you look at these charts that are coming out that show the entire gold mining, so the market cap of the entire gold mining sector compared to companies like Microsoft or Amazon, I mean, gold, I believe that we're still in the very early innings for the entire gold mining sector, and that the moves and some of the quality development stage companies could be, there could be a great opportunity for capital appreciation. We also, Dan, one thing that I think sets First Mining apart, from most all the other junior mining companies that I've dealt with in the past is your communication and transparency with shareholders. I know that Paul Morris, your director of investor relations, makes himself available to investors. If people want to reach out to him, it's Paul at firstmininggold.com. But that it feels like with First Mining that you put shareholders first. And on behalf of myself and the other shareholders, I want to say thank you to you for that.
Well, and thanks to all the shareholders for supporting us. Like we said, it's been a long journey, and we know it's been a long journey. We're delighted that we're at the point where it sort of feels like we've kind of turned the corner. But we do hasten to remind people, we're only so happy that we're gone from trading at $7 an ounce to $30 an ounce, right?
Right.
Like at $30 an ounce, it's still a pretty clear, like 5x reversion to the mean in terms of where our peers are trading. Yeah. So, and important to your point, Ron, and where we kind of started the whole discussion, if you have a constructive view on gold and silver, and you think that we are still in the early innings, then you're gonna get, maximum leverage on getting exposure to large numbers of ounces at a lower price and seeing those ounces re-rate. Because the fundamentals of our project, like we said, the difference in NPV between $3,100 and $4,200 in Springpole is the difference between 2.1 and $3.8 billion US. Yeah. So, we still think we're sitting at like current spot prices. We're sitting with $6 or $7 a share of net asset value in this company, and we're trading. You can buy it today in the market at 50 cents. Like, it's still pretty good value here. And yeah, for those of us who've been in it for a long time, you actually even longer than me, Ron. I've only been here since 2019. But the fact that these catalysts are now pretty clearly in the next 6 months that we're going to reach these catalysts, I think it gives a great sort of view on risk reward here. And I think it's still a great time because we haven't really seen the frenzy start in the mining industry yet. And I've lived through a few cycles, and I know what that looks like when the companies need to replace their reserves and they need to show growth. And that's when those values per ounce are going to get up to $200 plus that they're going to be willing to pay for something that's near term.
Yeah. The way I see it is First Mining has big leverage to the gold price, big leverage to the gold mining sector, and even, because relative to your peers, you're still undervalued, even big leverage to the development stage. And then, but wait, there's more, one more time. That is, there's a pretty clear path of some great potential catalyst for First Mining in the coming year, 2 years, 3 years with Springpole and Duparquet. I'm going to quickly, for 2 seconds, pull up the company's website for anybody who wants to go check it out. Firstmininggold.com has all the information. Also, as we previously said, you can reach out to Paul Morris, the Director of Investor Relations, Paul at First Mining Gold. Dan, thank you so much. I'm sorry I kept you so long, but there's so much to talk about with what's going on in gold and silver, but even more so with First Mining Gold. So thank you. And we're going to look forward to 2026 because I think there's a lot of great things to come.
Well, Ron, we always, as always, really appreciate your support and, look forward to one of my KPIs for 2026 is I got to get physically back to the basement. So that's we'll be back for a little in person here, hopefully before you know it.
Yeah. On a personal note, I'll share with the viewer that First Mining Gold was instrumental in me building Ron's Basement, which is now 65,000 subscribers, and supported me from the very. I remember. I'll tell a quick story. I think you reached out to me from the company, and I was like in shock. I'm like, the CEO of a gold mining company reached out to say hello because I'd been making a series of videos about First Mining Gold when I first started. So thank you for the support, Dan, and we'll look forward to a lucrative relationship into the future.
Absolutely. Thanks again, Ron. We'll chat again soon.